The income statement is also going to be required to have three categories: operating, investing, and financing, whereby the operating category is going to be a default category, which means that essentially items of income and expense that don't qualify for reporting in your investing or your financing category are going to be by default in your operating category.
Joining me today is Nancy Anderson, Vice President of Financial Reporting and CFO with RealPAC. Nancy, thanks so much for joining us again.
It's great to be here, Matt.
Now, the primary financial statements project has been in development for some time now, and I know you've worked with the global partners in RESA, including Nareit, in providing the IASB with input on the discussion paper as well as the exposure draft. What are some of the latest developments on the project?
Well, quite exciting. The final standard, IFRS 18, presentation and disclosure, is expected out in April, next month. So a couple of things that I think might be of interest that are expected to be included in the final standard. There's two new subtotals that will be required in an entity's income statement. So it's fairly income statement focused, that being operating profit and profit before financing and tax for most entities. The income statement is also going to be required to have three categories: operating, investing, and financing, whereby the operating category is going to be a default category, which means that essentially items of income and expense that don't qualify for reporting in your investing or your financing category are going to be by default in your operating category. So what I might have preferred to see is that the operating category was focused only on an entity's main business activities. However, with the way it's defined, it will also include other items that are potentially volatile or unusual in your operating category. And another note I wanted to make about the investing category, which is often interesting for real estate companies, is that the investing category will have to include the results from joint ventures and associates. Now, for many real estate entities, it doesn't really matter if you own the investment property directly or if you hold it through a joint venture, often for tax purposes or driven by tax reasons. You would run it the same as part of your main business activities for a lot of real estate companies. So that's going to be in the investing category. Maybe not what we have wanted, but that's the way it goes. And another interesting thing about the standard is you will now be required to include some of your management performance measures, which we call MPMs, in a note to your financial statements. So these are non-GAAP measures, or what were non-GAAP measures before, that represent an entity's view of an aspect of their operating performance. And then one other thing that there's all sorts of other requirements about aggregation and disaggregation, but that gives a flavor for what we expect in that standard.
And you mentioned that you expect the final ruling to be issued in April. What's going to be on the top of your to-do list when that happens?
Yeah, so interestingly enough, one of the first things I'm going to look at is actually the illustrative examples that accompany the standards. So illustrative examples are meant to be non-authoritative and literally meant to be examples. However, in the exposure draft, the illustrative examples, one of them that was included was for a real estate entity. Now, many years ago, the RESA Group, the International Coalition of Real Estate Associations, had come up with a potential income state template for real estate companies. This was even before Canada had implemented IFRS, so quite a while ago. And time has passed now, and we're not sure that one example should be followed for all real estate companies globally, regardless of operations, regardless of asset class. So what I'm looking to see is that it's made clear that this is simply a non-authoritative example, only one example of how real estate companies may present their income statement, not necessarily the only way.
And sticking with Canada, do you think real estate companies there will begin reporting FFO in their financial statements?
I think so. The reason I think so is I believe that FFO will qualify as an MPM. The reason being, part of the definition for MPM in the standard is there's a rebuttable presumption that if you are disclosing an MPM in your public communications, talking about it, analyzing it like they do for in Canada with FFO, hopefully RealPAC FFO, then the expectation, I think, is that that will be required because it is management's viewpoint of an aspect of financial performance. So yeah, I think it will.
And finally, I understand that the IASB has been working with the ISSB on the management commentary project. What's the status of that project?
Yeah, so a couple years ago, the ISB put out a revision to the management commentary, which is an old document, and suggested some updates to it. It's non-authoritative. But then around the same time, the ISSB, the Sustainability Standards Board, all those mouthful acronyms, they put out IFRS S1 and S2, and then after that, they went to the public and said, we want some feedback on what our agenda should be. So they did an agenda consultation, and one of the questions on there was, should the ISSB be involved in an integrated reporting project, and should that project be a joint project with the IASB? So I believe that all the feedback is in. The ISSB has analyzed that feedback. What remains to be seen is if they received enough feedback to say, hey, you should do a project on integrated reporting, and hey, we think you should work with the IASB on that.